This is a quick disclaimer put out by our awesome EMDs here. And why did my screen just do that? In terms of the WealthShare offering, which we're not really talking about tonight. Right now, I hope to make this a informative and educational kind of event tonight. But there is a disclaimer here that if we're talking about anything that might be forward-looking, it's just to know that obviously there's no guarantees with any investment out there, and that we're not giving you any direct advice tonight. This is purely for informational purposes, and obviously hope you find it to be of value. So I wanted to talk a little bit briefly about our team and who we are. So WealthShare is a real estate investment trust, or a mutual fund trust, which is a private REIT. And this is our team. My name is Natasha Phipps. I'm the CEO of WealthShare, and joined tonight by a few team members popping in. But my husband, Rodney, Monique Verlon is our CFO, and amazing accountant that we have on our team. And then Darcy and Deanna Boyden, who are very well-known real estate investors in the Canadian investing community. So let's get started. I wanted this event obviously to be about the economics of what goes into looking into an opportunity or a city. This isn't just about Calgary. This information can be applied to any city or market that you might be looking to invest in. And part of our proposition and our story here at WealthShare is that we want to share the knowledge that we've learned and that we're learning along the way, hence the term WealthShare. There is obviously no shortage of opportunities out there. We hope to be different in that we are wanting to share everything we have learned along the way, everything we are learning, and continue to provide that value to our investors and those that join us for the ride. So WealthShare was started about a year ago, or the idea was started about a year ago, with one property that we acquired last year. And that really was the one that kind of started it all. And today we are launched as a private REIT here in Canada with a focus on acquiring multifamily real estate. Today, we're talking about the economics in Alberta and Calgary, but the idea, obviously, with WealthShare is we're not looking at Calgary just because we're in Calgary. We're looking at Calgary right now because that's what makes sense and what is attractive for lenders and investors all over Canada. The points I want to discuss tonight are in thinking about economic indicators and what do they mean and how can you use them, where do you find them, and hopefully that's valuable to you when you're looking at WealthShare, but also all your other opportunities that are out there. And of course there's more economic indicators than we're going to cover today. There is a lot that you could dive into, but I hope this will give you at least a starting point to understand what we do when we're looking at areas to consider to invest in. And again, this is not just Calgary. We will be looking to invest outside of Alberta and obviously inside of Alberta, and we'll apply these same principles when we are looking where we might want to invest. So we're going to cover the key indicators like GDP, population growth, migration and immigration, and interprovincial migration, employment, interest rates, inflation, and then of course market conditions. And as I said, there is more that we could go into, but wanted to highlight these initial ones that are kind of the common ones that people analyze when they are looking at an area and what they mean. I know within our WealthShare community, we have brand new investors, we have seasoned investors, and for the veterans out there, this will probably be quite a basic review, but we want to make sure that it's understood to everyone that is out there what we're talking about and why. So the first thing to look at is GDP, and GDP can kind of be considered like a quick snapshot report card of the performance of a city, province, country, and it's used, like I said, as almost like a report card. It gives you that quick snapshot. If you're looking for good definitions of what these economic terms mean, on the Stats Canada website, they even have videos that break down how these are calculated, what data is being gathered from where, and they give a really good indicator as to how these numbers are calculated, which is also important when you're wanting to make sure you're comparing apples to apples, right? So GDP, clearly, if GDP is going up, that is a good thing. If GDP is going down, that means we have a shrinking economy, or that economy is going into potentially more recessionary times. So this snapshot here is interesting in terms of the Canadian GDP per capita from 2006 to 2021. So about a 15-year span here. Now, this is for Canada as a country. And the one thing I wanted to point out here is, yes, obviously we're all Canadians, we're all in this country together. But when talking about real estate and trying to analyze an area or a city or province, it's important that you get granular. So it's fine to look at these, snapshots, but at the end of the day, there is no Canadian real estate market. You really have to get more specific. But this might make sense in just giving you an idea of where the overall country is at. And as you can see, I mean, there's some negative numbers here. I mean, we all remember the 2008, 2009, economic sort of crash that we endured, and what that meant for real estate. And the also important thing to note is, just because a market is going up or down, that doesn't mean there's not opportunity. It just means the opportunity might be different. What you do in one type of economy might not be the exact same strategy you do in another type. So that's why identifying what the local economy that you're investing in is important. So I want to go to the next slide here. And this is the national sort of major Canadian cities in terms of the GDP kind of per resident, in terms of what our performance is per city. So this is from Stats Canada. Again, Stats Canada website is awesome. There's a lot of data on there. There is a lot of information, and you can pull these slides and decks out. This was in a article by the OWL, the Alberta Treasury Branch newsletter. But first thing to highlight here, obviously, is given we're in Calgary and we're talking about why Calgary, why now, is Calgary is right at the top. So we have the highest GDP per resident in Canada. So that doesn't mean we have the largest GDP, because we're not the largest city in Canada, but per person, per resident, we are outperforming the rest of the major Canadian cities, which means our economy is making good strides, right? We have that good economic report card. So that right away is a first indicator to be like, okay, GDP is going the right direction. That might be something to consider. And you can look at these GDP numbers, like I said, specific to cities, provinces, and get quite granular with it, which I encourage you to do if you are looking for opportunities. But these snapshots just give you a good idea as to what is happening with the local economy in whatever city you might be looking at. So this is the first thing that I look at when I'm looking at a city or area that I'm not familiar with, is what's the GDP doing. And the reason GDP is important, each of these indicators kind of lead into each other, is people, right? Population growth and the size of the population are two important factors when we're talking about housing, right? I always say, where are the people going? Follow the people. The people leave you the breadcrumbs as to where to invest. And people will look for several things. They will look for opportunity in particular, right? So GDP means opportunity. There's economic advantages to that area. And Calgary has that in spades right now, which is really exciting. In thinking about these people, though, it's also important to talk about size of market. If you are looking to invest in a market, there are pros and cons to the size of the city that you might be looking at. For WealthShare, we are looking for larger cities. We're not, going into smaller towns and cities, at least at this point. And the reason for that is lender requirements are one thing. As you get into smaller population sizes, it does change the lenders that might be interested in. But more so, at least for my sort of thinking, is smaller centers often have smaller factors that are that are influencing GDP. So there's less indicators. So maybe if you're you know, in a mining town or an oil town or something like that, if there's only one kind of economic driver for that population in a smaller center, that raises risk. And so there's no right or wrong answer here, what risk you're looking for, but that is just something to consider and what might align with your strategy. So follow the people. Why are they moving there? And who are these people and what kind of opportunities are they looking for? So we're going to talk about employment in a little bit, but it's important to think about who is this population? What are they going to be doing? And is the type of real estate I want to own in alignment with what those people might be looking for in terms of what they can afford, what they have in terms of needs in a property, and is that something that aligns with what you're looking to provide? So where are the people going and why? Immigration and interprovincial migration is a huge, obviously, factor as well in terms of the economy of a city. Interprovincial migration means exactly as it sounds, people moving from one province to another. I'm going to pull up some stats here next for Alberta, but that net provincial migration number, meaning is there more people leaving a province than there is coming, or vice versa? And that will tell you, again, where are the people going? And being in a city or town or area where more people are leaving than coming, that likely means we're going to see higher vacancy, rents coming down, not ideal for us as real estate investors. And so that's certainly, you know, something you want to consider. So people plus GDP growth equals opportunity, which equals housing demand. So, which is exactly what we're looking for as real estate investors, exactly what we're looking for at WealthShare. We know at WealthShare, we're looking for housing opportunities that attract a specific type of client. And that might be different for everyone, but just make sure that aligns in terms of what your strategy might be looking for, your strategy you might be looking to implement. And the interesting thing about this data is you can really get specific with it down to the community. So when you're looking at these at economic data, most major cities will go right down to the community. So you can take what we're like talking about here and apply it to a very specific way. Population is, of course, a big one. What is happening with population, again, in talking about people, and as we were just talking about net migration, over the first 3 quarters of 2022, and you may have seen this all over the news, like Alberta saw such a major surge of positive net migration into the province. And it was a record-breaking time. We saw over a, Q1 to Q3 here, there was a 377% positive change and growth in that. That is massive. And people were seeking similar things in terms of housing, employment, affordability, all of those factors that we sort of just talked about, like why might people be moving? That solution that they were looking for was found here in Alberta. Not just Calgary, but obviously Calgary and Edmonton are the two major centers. Of course, international migration as well. And you can use these numbers to determine, is the population growing, right? Like not every city and town in Canada has a positive population growth, and it may be slowing down or it may be negative, especially as you start looking at some of the smaller centers. Negative population growth would be a concern of mine if you're looking in those areas, even though the price might be attractive and that kind of thing. It's something you want to consider if that's in alignment with what you're looking to do. So this is again, put out by Stats Canada, a population of Alberta projected growth. Obviously there is no crystal ball, but this is what is projected for Alberta up until 2044. And, I like how they do also low, medium, high in terms of the, outlook, but this is the type of thing you can go and find online. And you can also find different sources. So different projections might have a little bit different, take on the information. So the province of Alberta also does their own package of statistics just like this. Now, theirs is very similar in terms of the projections here, but go and look at more than one source to see if they're in alignment, to make sure that the data that you're using is something you feel that you can trust. So Positive population growth, that's a great one, obviously, for Alberta. Employment, again, where are the people going and why are they going there and what's drawing them there? And this, to add to that too, is are businesses looking to relocate there? And employment is obviously a key indicator to consider. And for us as investors, we want to align your customer with the type of asset you might be looking to acquire. So what I do when I'm looking at a community or a center is, what are the major employers nearby? What is the type of wages that they might be earning? What age group are they? And does that align with the type of product I want to bring to that marketplace? If they don't align, and I want to bring a product for working professionals who want high-end finishes and can afford a higher rental rate, but the area really doesn't call for that, that's not something that would be very strategic. So getting granular with that type of information, and we're going to actually look at 2 communities in Calgary with some of this information to be able to compare like I would, to see if that does align. Wages are a big one, of course, too, when we're talking about employment, and different areas, as I said, will have different economic drivers and different job opportunities nearby. So take those into consideration too. The third one here is in talking about affordability. Employment these days as well isn't just located in one city anymore. There's many Canadians now who, just like I am, work from home and have their home office and can be employed, but may seek affordability elsewhere. So affordability also aligns with your financing as well. So when you're looking into a community, look into what is affordable. There's the consumer price index as well that will give you so much data on this and determine what the affordability of a certain area might be. And to kind of tie that together, so we're following the GDP, we're following the people, we're following the jobs, and that is a recipe for success in deciding where you might want to invest. So next one, this is a really interesting slide. This is put out by the Calgary Real Estate Board. I have a few graphics of theirs because they do such a good job here. But couple things here. So this is obviously for the whole province of Alberta. And remember at the beginning how I said there is no like Canadian real estate market. There's also no Alberta real estate market. What's happening in Red Deer doesn't not necessarily mean that's what's happening in Calgary or vice versa. And this is a really good snapshot of that. This is also a good reminder for us to not just look at one indicator. So for example, this is a employment growth chart. So it's showing us what the job growth is in these regions. So Calgary, as you can see, we have a 7.67% rate. I'm just moving my Zoom thing here because I can't see my slide. And up north in Cold Lake, we have 2.93, in Edmonton, 3.53. But what I wanted to point out here is, okay, well, this looks good, and Red Deer is negative there, but like, what does that mean? This really doesn't mean anything to me until I can compare it to the previous years, right? And not only that is employment growth, but what's the employment opportunities? So for example, I know up in Cold Lake, if I was only looking at this employment update, okay, that's great. There's 3% employment growth here. But I also know that there's only a couple major industries. They have a little bit higher vacancy rate up there. So you'd want to dig in further and use all of these indicators as a way to determine, like, is Cold Lake truly better than Red Deer, or is it just better in this one regard? So always making sure we're pulling all the information together into one cohesive manner. Obviously, the hot topic for all of us investors for quite some time has been around inflation, interest rates, and there's a few notes I want to make here. Since we're talking about multifamily real estate, all this applies to all real estate, but WealthShare is investing in multifamily real estate. One reason why so many investors are very excited about commercial multifamily this year as well, it does have to do with interest rates. So if you are looking for a CMHC insured commercial lending product, your interest rates are influenced by the bond rates, not by the Bank of Canada rates. And those have been more favorable in recent times, though the bond market is on a little bit of a roller coaster right now. But it's just important to know that when you're running your numbers, you're doing your analysis, that we're looking at the right types of rates and financing options for that specific product. So when we are analyzing a property, we are looking at a property with all different types of financing plans and seeing which one makes the most sense for that property. And it's not a one-size-fits-all answer. Now, what are interest rates doing to the Canadian real estate market and to Canadians in general? Inflation and high interest rates have made affordability a very, very hot topic, which again points to why Alberta is sort of holding its own. It's not expected to sort of, struggle as much or see as much downward pressure as many other Canadian cities. And partly that's because Alberta was sort of coming out of that recession already as we moved into COVID. And so we were sitting at a very different, level than other major Canadian cities. But what the facts are here when it comes to Alberta is high interest rates are making it less affordable to be elsewhere. And that's also putting up pressure on rental rates. So Canadians are seeking opportunity elsewhere. They're seeking where they can live and put more money in their pocket at the end of the month. And that's making Alberta very, very attractive, which we saw with the, interprovincial migration numbers as a very good reason why many people in Ontario and BC specifically are looking at Alberta. And because of all of this, most economists, that I've been listening to, obviously I'm not an economist, but are of the agreement that Alberta should sort of buck the trend a little bit this year in terms of the looming recession that is in talks all over Canada. But again, you have to look at the individual cities and areas that you are looking to invest. Don't just take a generalized approach to any of this. In my opinion, you really need to get specific. So I won't spend too much time on that. I know we've all obviously seen a lot of news and information on interest rates. So the next thing to look at when you're looking at an area is how to determine what is happening with the real estate market. And this data is very easy to find for any city, is what's going on with the real estate market and what are the most important key points. If we're just looking at a quick snapshot, would I suggest that you look at first? My favorite stat of real estate stats is months of supply, and is a really important indicator. What direction is the market going? Now, for us as investors, as affordability becomes an issue with home buyers due to high interest rates, that does put more pressure on the kind of lower priced product in the market, and then also keeps people renting for longer. It does have a positive impact on the rental market because people just can't afford to buy. And so what we're seeing here in Calgary, this is kind of a snapshot of what happened in 2022. Our average months of supply was 1.68. So that is a very, very tight market condition. Months of supply means if no other listings came on the market at any given time, how long would it take for the current supply to sell through based on the current pace of the market? So if this number was, 5 months of supply, that would absolutely be a buyer's market. 3 months and under, like around 3 months, is kind of balanced market. Under 3 months is definitely absolutely a seller's market, meaning low inventory, tight conditions, and a little bit of a challenging market for buyers to get into. So this obviously is a huge change, as you can see here, 25% year over year decrease in months of supply. So that is a trend that's going to mean prices are likely to go up, or even hold their own, probably more like this year, and people may be forced to rent longer. So, by the way, if anyone wants the full package of the Calgary Real Estate Board data, happy to provide that at any time. They do a fantastic job. Also, in looking at inventory next, this plays very much hand in hand with months of supply. Shrinking inventory means tightening up of conditions, and likely prices are going to go up, which, as you can see here on our benchmark price, was a 12% year-over-year increase. I want to make a note here about year-over-year numbers in the last couple of years for any market. This isn't just Calgary. In understanding that obviously we were in a very unique time during COVID, there's a lot of outlying factors that were influencing all kinds of things happening in the market. And so looking at just one year over year, if I was really diving into area, I would look at 5 years to go, okay, what's kind of been happening? What has been the trends? Not just looking at one snapshot year, but look at what's happened over time to give you that more generalized trend, because COVID was such a massive outlier that we're obviously still seeing the effects from, and don't necessarily give you a perfect indicator of what's been going on. Now, I'm sure you've all seen this in the news. I mean, this came out quite some time ago, but I think it's still relevant in terms of particularly multifamily real estate, if you're looking to get into multifamily real estate. And the reality is that the amount of people that are expected to be, needing a place to live here in Canada at affordable rates, we are in a serious shortage here. And, Canada's housing supply is at a major shortage. And there is a plan to restore affordability by 2030. And this is the reality. To restore affordability, an additional 3.5 million affordable housing units are needed by 2030. That is a staggering number, but is part of the reason why us as WealthShare know that we want to be a part of that solution. We want to provide good housing to our communities that we invest in. And also, CMHC, in conjunction with this, has programs inside of their lending that will provide us as the owners and investors unique sort of financing offerings that weren't available several years ago. If you make a certain number of your units affordable, then that gives you points in their financing system. And that is all in an effort to encourage us to make more affordable housing and be a part of the solution here in Canada. And that's certainly something that is top of our minds as well when we are analyzing opportunities. So this is just a summary sort of slide. Again, the Canadian real estate market, but these are things that are affecting all Canadians. And all of these things are only pointing more people towards Alberta right now. And as to summarize, of course, we're talking about inflation, the high cost of living everywhere, high interest rates. To see 7 rate hikes in 2022 was obviously a huge blow to consumer confidence and what people can afford. And this one I find very interesting. The Canadian home ownership levels are declining, and pretty substantially in my mind. Home ownership levels in 2019 were 68%. That's dropped 4% is the projection of where it'll be in 2023. That points to the affordability crisis, that people cannot afford to buy necessarily, or they don't have the confidence. And what that means is that just puts more demand on the rental housing side, which us as investors, you as investors, are part of that solution. Now, sadly, that means that the kind of window of home ownership is growing wider and less. But pointing back to why we need more housing, this is why home ownership levels are going down. And the looming recession, obviously has Canadians seeking kind of reprieve where they can. They're looking to put more money in their pocket at the end of the month and do what they can to make this time a little bit easier for them. And that might mean picking up their family and moving across the country to Alberta, where wages are higher. We have lower cost of living and lower rental rates as well. So all that means more money in your pocket. With all of that, in mind, looming recession to me is also a time where, okay, we need to be getting our money working for you. We can't be having money just sitting there in the bank doing nothing. It's important that us as Canadians are taking control of our finances. We're diversifying our offerings inside of our portfolio and finding opportunities that align with your timeline horizons. And I think, it's always a good time to do that, but this is something that a lot of Canadians are looking at. So another couple things here, just to summarize about the why Alberta. We talked about GDP, we talked about net migration and immigration, but we didn't talk about the regulations. This isn't necessarily an economic indicator, but it's an influencer as in terms of why investors might consider Alberta. And this applies to the whole province. It's to do with landlord tenancy laws, taxation, and those two things are massive components to why investors look at Alberta, why we love Alberta as well. The landlord and tenancy laws are a lot more fair. There is the ability to raise your rent as the market can hold it. So there's no rent control, other than you can only raise rent once per year. So raising the rent once per year as much as the market will bear is a huge thing. And especially when we're talking about multifamily real estate with WealthShare or any multifamily investor. If you're looking to invest in multifamily real estate, you'll quickly learn that so many properties out there are underperforming in terms of rents and are not necessarily being maximized in terms of the capital that they could be generating. And in multifamily, the name of the game is really to maximize your net operating income. And so in a province where you can improve those numbers inside of a 12-month period is a massive opportunity when it comes to the financing opportunities that you might have. So that's a huge reason, especially when it comes to multifamily real estate, that you can raise those rents once per year. You can also maximize parking fees, pet fees, and those two things alone by maximizing those things alone can get you an incredible multiplier in terms of the capital that might generate for you upon refinance of a property. So stay tuned for our next WealthShare event, because we're going to be actually going through numbers and showing you how we analyze properties, and hopefully that'll provide value for you when you're doing your own numbers, possibly on a property. Lastly, for Alberta and Calgary specifically, I mean, Calgary is a very livable city. There is a lot of amazing things to do here. Obviously, being at the foot of the Rocky Mountains will never go out of style and continues to be a major lifestyle factor for anyone looking to Calgary. They want to live that lifestyle. We're not a huge city. You can easily live the suburban lifestyle, work downtown, and then Friday drive out to the mountains for your fun weekend away. So really good quality of life here, and affordability when you're putting more money in your pocket for residents means that they can live that quality of life that they may not be able to elsewhere. So I wanted to provide an example, as I talked about at the beginning, about getting specific. So obviously we talked about Alberta and Calgary, and all of these data points that we're talking about here, you can find them for every major Canadian city. So I urge you to do that. Stats Canada is obviously a big one. Also, like for Calgary, we have Calgary Economic Development website. Edmonton has the Edmonton Economic Development website. So each city will have their own as well. And this is just an example of the type of specific data you can pull. So this is taken from a census that was done here in Calgary. Unfortunately, in the last few years, they haven't done censuses. So this data is a few years old now, but it applies regardless. So if, as a real estate investor, you go, okay, I want to look at X city. Great. Now you got to look at areas and communities. And this is where, we get very granular and specific when we're comparing areas. So I have two communities here in Calgary. One is called Mission. This is in Southwest Calgary. This is a inner city area that we acquired our first acquisition last year, called the Bergen. And this is the exact data I was looking at 1 year ago when I was going, okay, why should I like Mission? This and many other factors. So in a census, you get to learn who the residents are they owning, are they renting, what languages do they speak, how long have they been here in Canada, and what is their average income, all of those really granular factors to decide if what you're going to buy or build or whatever you're going to do aligns with what's going on in that specific community. Because that's huge. You want to make sure that will ensure the success of your property. So this was one of the first things I looked at in comparing this community was renter households. So the community of Mission has 68% of its households are renters. And for the city of Calgary, 29% is the average renter households. So that immediately tells me, awesome, okay, this community has a high rental demand. Most people who live there are tenants. Great. Then the next thing I did was looked at their income levels. And I didn't put that on here, but what that told me was the average income of a Mission resident was significantly higher than the average household in Calgary, which, you know, tells me that those people can pay good rent for a nice premium type of product, which is what we had acquired. So I wanted to make sure that aligned. Whereas, you know, say if I was looking at Mount Pleasant here, the renter households is still above the average for Calgary, but it's not quite as high. So, you know, that's still good, but why not look at an area that has an outstanding number, right? And that's what Mission has. So you can find this type of data for all kinds of major Canadian cities. And I urge you to take a quick look. They're not hard to find, and get specific with the community. And the community profile data is really interesting, and you can really spend a lot of time there. But these are the main things I would look at: is income and percentage of owner versus renter. So hopefully you find that helpful. And that was kind of the end of the economic sort of indicators that I wanted to talk about. I'm going to quickly just talk about what our goals are at WealthShare, and in combining everything we talked about tonight, this is why we're looking at Alberta as well from a multifamily real estate perspective. All of these are really good indicators as to what our markets are going to need. And that's why we are looking at multifamily real estate in Calgary, and well, not just Calgary, all of Alberta. So for this year, our goals for WealthShare are to raise up to $15 million of funds and acquire an estimate of $50 million of assets this year. So lofty goals. Reach a minimum of 150 investors, which we are well on our way to. And most importantly for our investors is the last two, obviously on top of the awesome opportunities we're bringing to the table, but we want to host these value-driven events. We want to share what we're learning. We want to share how we do things so that it's not a mystery. It's not a secret. So many of these funds out there, I feel like, you know, not that they're not doing it. It's just that it's really hard for people to obtain this type of information. So we want to be very transparent and open all the way with anyone who wants to kind of join along with us. And Deanna Boyden is hosting a kind of a show right now every couple of weeks where we're talking about really tangible things. Like last week, she interviewed Taylor Morgado about elevators and what you need to know about elevators and what they cost and all of that stuff. So tangible value, that's what we want to give you. And then also make our offerings accessible and transparent to more Canadians. So WealthShare, with the vehicle that we have, the amazing thing is eligible and accredited investors can invest with WealthShare. If you have questions on that, that's a separate matter. But that opens up the offering and the opportunity to a whole lot more Canadians than if we didn't go this route in terms of our structure. So that's something we're very passionate and excited about. And we've rolled that right into our kind of offering, and the low minimums to invest. So as I said, we're open to eligible and accredited investors. Our sales team over at Atlas One can help you with all of those types of questions. Also, something we're very excited and passionate about is that we are registered account eligible. So your RRSPs, your TFSAs, your LIRAs, all those types of accounts can be used to invest with WealthShare. We have a low minimum investment of $1,000 at this point. That will likely go up once we reach our 150 investors, but that's where it is right now. And at the end of the day, even if we do bump it up, we're going to keep it on the lower end and accessible in comparison to sort of our competitors out there, because we truly do believe in accessibility, and we want Canadians to have this as an option, not just something that's reserved for the larger investors. Our targeted returns are 8 to 12% annualized with an 8% preferred return. And we'll be doing a continuous raise, for years to come as we build out our portfolio here. That being said, we would love to have you on board, of course, but I can give you a bit more overview. Here's the offering details. The trust is, as I said, open to eligible and accredited. And this is our issuer fees. So we are the issuer, just so you know. A fund makes its money by management. So management of assets, acquiring assets, doing all the legwork and due diligence and the structure, and all of that is part of our work. But it's not like a joint venture where it's like 50-50 returns. So more returns are kept for the investor here. And if you want to learn more about that, of course, there's tons of information to dive into, but I wanted to keep tonight really value driven with the information that was provided. So hopefully that was of value to you. Just to introduce, if you want to get more information about WealthShare, Atlas One is our exempt market dealer. And an exempt market dealer is our, sort of third-party independent sales team that also can answer any questions you have about not just WealthShare, but investing in private securities, period. They can give you advice on how to get your RSPs to work and what are the steps involved. They're a really awesome group that have been very supportive of us and are providing great value to all of our investors as well. So if you do want to invest, I will be sending out after this evening, not even if you want to invest, if you just want to review the information, you can make a free profile on the Atlas One website. Once you have that profile set up, you'll actually be able to see all the offerings that Atlas One has as well. So you'll be able to check out WealthShare, what we have to offer, all of the documents and everything like that will be available on there. And then if you do want to go ahead, there'll be some eligibility questions and things like that they'll have to ask you, but it's all online and pretty easy to manage. So that is the end of the sort of formal presentation.